Hello everyone, my name is Gabriel and today I will present you the financial analysis of Metro Incorporated. The video will talk about how well the company evolves based on three types of analysis: horizontal analysis, vertical analysis, and the ratio analysis. When we look at the horizontal analysis I made, we see a great growing of the sales, which is about 11% higher over the quarterly data. Revenue must not be the only preoccupation, because it should be noted that the cost of the revenue also grew for 11%. It's not that bad because all that gives us a gross profit that increased for a bit less than 10%. The best scenario would have been an increase of the revenue with a depreciation of the cost of the revenue, which would have made the gross profit going up like a rocket. With all that going up, the inventory follows with an increase of almost 22% over the fourth quarter. The account payable also follows, which is not really good because the company contracts more debts. But in another way, this is how the company achieved this increase of profit. As the graph shows us, the company follows a good growth in general. The vertical analysis is a bit different. In this case, I will look at different elements of the balance sheet as a percentage of the current asset. As we can see, the inventory takes a good part of the current assets. In this case, a really good management of the inventory is crucial to lower the cost of it. It's maybe one of the hardest jobs for Metro to manage its inventory because it's big and they have no choice to keep it like that because of the number of the retailer that they need to supply. Moreover, we can see that the receivables are also a big part of the current assets, which is not really good for Metro because they might never see this money in their pocket again because there will always be people who do not pay their bills. The cash and short-term investments only take 13% of the current assets, and it looks fair to me. Now let's compare these percentages with another company, Bombardier. At first look, they seem totally different because of the numbers and the field of activity. But when it comes to percentage, they are not that different. They keep about the same percentage of the current assets in inventory. The only difference may be the inventory turnover, because foods can't be stocked for a long time compared to airplanes or all-terrain vehicles. Bombardier seems to allocate a bigger percentage of the current assets compared to Metro, probably because they have more short-term activity to finance. So the vertical analysis is a great tool and the results differ from a company to another, but it's really useful when it comes to compare two companies. Now let's analyze Metro by the ratios. With this graph, we can see easily that Metro has a great debt ratio. When we calculate it, it gives us a ratio of 24%. That means it can easily meet its long-term obligations. It's the same thing with the 1.17 current ratio Metro has. In this case, that proves us that they can easily meet short-term obligations. The profit margin is also a good indicator of the health of the company, and in this case, it's not really high, but I think it's normal because Metro will play with the volume instead of the big profit margins. So this was the financial analysis of Metro Incorporated based on financial data. We saw the horizontal and the vertical analysis, also the ratios. So thanks for watching and I hope you enjoyed the video.